Hi, I'm Mike Reynolds, a senior reporter covering the media industry with S&P Global Market Intelligence Tech, Media, and Telecom News Team. Welcome to MediaTalk, a podcast hosted by S&P Global, wherein the news and research staff explore issues in the ever-evolving media landscape. Today, I'm joined by Melissa Otto, head of Visible Alpha Research at S&P Global. Among other things, Melissa tracks developments and provides commentary, previews, reviews about the performances of major companies in the tech sector. Today, though, we're going to take a look at some of the media conglomerates: Walt Disney Co., Warner Brothers Discovery and Paramount Global, and Fox. Welcome, Melissa. Thanks for joining us.
Thank you so much for having me. There's a lot happening in the space.
As alluded to, it's going to be a busy time for the traditional media companies during the week of August 5. A lot to cover. Melissa, I'm going to start with Fox. You ready?
I am.
All right. Okay. For Fox, the period ended June 30th represents its fourth fiscal quarter and the end of its fiscal 2025, which saw the company hold the rights to Super Bowl. The NFL Championship game not only tackled record viewership, but registered record ad revenue of about $800 million across Fox Broadcast, Fox Deportes, and Tubi. If you have the Super Bowl, it's going to be a pretty good year, right?
That's right. With 42% of Fox's revenue coming from cable network programming, Visible Alpha Consensus estimates $1.4 billion in the queue this year and closing out the year at close to $6.8 billion. So looking ahead to next year, this number is expected to stay around $6.8 billion. Not too exciting there. And then with 85% of Fox's EBITDA still coming from that division, Visible Alpha Consensus estimates $679 million in the queue this year, and then closing out the year at close to $3 billion. And then looking ahead to next year, this number is expected to pull back a bit to $2.8 billion.
Sure, it makes sense. They're going to have the FIFA World Cup next summer, but Super Bowl ranks above all in the sports world. Melissa, if we can talk a little bit more about advertising, what's your take on Fox's free ad platform? Tubi continues to add content and viewership. It had a 2.2 share of viewing in June, according to the Gauge, Nielsen's TV consumption report, a tick above Roku and ahead of Paramount, plus NBCU's Peacock and WBD's Max and Discovery. Free streaming is a good thing, I suppose.
It's really interesting. It's really changing the dynamics in the space. Some would argue that it's been a bit disruptive. I think if we look at the overall streaming space, it still seems to be divided by the free versus the paid. Now, Netflix is an interesting dimension to this because they're changing their business model up by offering an ad-supported tier. So it'll be interesting to see if they ultimately end up migrating to that free space and then just have everything supported by ads. Unclear at this moment, but they are still the leader. Now, in terms of Tubi, I think what's pretty interesting about Tubi, and you also mentioned Roku, is that based on data from Kagan, we can see an increase in consumers watching both Tubi and Roku compared to just a few years ago. So it does imply that they're seeing decent growth in that space.
Yeah, no, I think it continues to come on strong. And again, if many of us are paying for the various SVOD versions, it's good to have a little antidote with something that doesn't cost anything. And again, I watch it very occasionally, but I know others who tune it in more frequently. So I'm assuming, and Fox would probably agree, that there's more growth ahead. Let's look a little bit at Fox News Channel, which, is their cable king, as it were. Given the political landscape, both houses of Congress are Republican majorities. Trump is in his second term. How important is Fox News to Fox Corp overall, Melissa?
It's hard to say exactly how to quantify it and how to break it out. One thing I can really point to, though, is going back to your question about ad revenue. Ad revenue does make up 21.5% of cable revenue. Based on Visible Alpha Consensus, this will remain flattish over the next couple of years. So the market overall is not expecting much growth there. So if we just extrapolate that, we could potentially make a similar assumption for news.
Football season right around the corner. Some can't wait. I'm not including myself in those ranks. Anyway, Fox, though, they've been on the sidelines for aggregate streaming, while others, their peers in the space, have all jumped in. They're going to get in the game with something called Fox One. It will have sports, news, and their entertainment fare. It's supposed to coincide with the start of the football seasons. Your thoughts on that? Does this make a difference for Fox?
Live sports is an exciting dimension to content. We have seen a lot of evidence of it really bringing in viewers and advertisers and driving engagement in a pretty powerful way. I'm just going back to your Super Bowl questions, just simply from Super Bowl, you can see that there is a very powerful and positive dynamic there. So, thinking about live sports, that's also something that we've seen from Netflix. And
Right.
I think it provides an interesting diversifier in their overall landscape of content. And so I think going forward, it could be a positive for them. It's brought in users to some of their competitors. And we've also seen, based on the Kagan data, that ESPN is losing some subscribers year over year.
Sure.
So it does suggest that there may be an opportunity to grab those, and maybe they're trying to take advantage of that situation.
Yeah, they say that yes, this is for cord nevers or cord cutters or the younger folks who have never been in the traditional TV ecosystem. So we'll see how that goes. And by the same token, or similar token, I should say, Disney is going to launch its enhanced ESPN product again, sometime start of football season, early fall. A lot of this has drawn a lot of attention. ESPN has always been the biggest network in terms of affiliate fees for the cable bundle. Is there much disruption ahead, or is this just some folks are going to opt in and the rest of us is still going to watch ESPN on linear?
Hard to call that. I think it's something that we're watching very closely. It is worth noting, though, that sports do make up 20% of operating profit for Disney. So it's
Right.
clearly an important component to their business model. How that evolves going forward is going to be pretty interesting to see if it drives a higher margin combined with a higher top line.
Yeah, it'll be interesting. Again, we're all waiting with bated breath to when it's actually going to come out, and we won't know what its impact is for a while. But again, just for it to come out of the chute will be great. We've all been anticipating this for 2 years now, so we'll see. Also on the streaming front, Disney finally completed its transaction with Comcast for the rest of Hulu. Disney's been doing a lot of integration with its different streaming products, and I believe the enhanced ESPN service is all going to be part of that. Do you expect more integration from Disney throughout its streaming realm?
I would just point to the increase in new subs. Yeah, based on Visible Alpha consensus, we can see that from last quarter, it was 205 million. This quarter, it's 215, giving us basically a net 10 million new subs. And for the fiscal year 2025, that's expected to end at 220. So I think just continuing to ratchet up and demonstrate that bringing new users in, viewers in, and driving that engagement.
Yeah, they've been pointing upward in terms of streaming. And again, with more properties and different ways to market, integrate, working with outside partners. I won't say they just scratched the surface, but I think they're still pretty in the early innings here.
One thing that Netflix does talk a lot about in their earnings call is monetization. And with over 200 million subs at Disney, one wonders what they may be thinking about in terms of monetization of those, and particularly the new subs, and how they can drive not only engagement, but also that monetization piece as well.
Let's turn to a couple other parts of Disney's broad portfolio. This is on the film side. Marvel's Fantastic Four is coming into theaters now, and Freaky Friday, which is a sequel to Jamie Lee Curtis, Lindsay Lohan's Freaky Fridays all those years ago, is also coming out. Overall, another strong year in the film realm for Disney.
Could be. It depends on their costs. I think what we've seen is that production costs have been trending a bit higher than expectations, and the market doesn't really seem to love that.
Fair enough. We got our Hollywood guys coming up in probably mid-September, so we'll take a deeper dive into what the summer has wrought. Let's go to Disney's largest segment, parks and experiences. During its fiscal Q2 call, Disney executives said combined revenues for parks and experience and consumer products grew 6% year over year to about $8.9 billion, and operating income rose 9% to $2.5 billion. There was some declines internationally, but gains domestically. CEO Bob Iger is also bullish on the future of Disney's cruise business, which saw the launch of Disney Treasure in the first quarter. There's a couple more ships coming on board later this year. Melissa, have you been on a Disney cruise? Is that something that interests you personally?
I have been on a Disney
Really?
cruise,
Okay.
actually. Yes. So I love this question. It's a lot of fun
Okay.
because it is really important for those of us covering and looking at the stock to really understand what the company is doing, what the experience is for the user, the consumer, and what the offering is and the price point, what the value is for the customer.
So it was a
You
good
know,
time.
and I would say my daughter absolutely loved it. I think she really enjoyed the engagement with the characters, the activities, the kids' room, loved the food. For me, it was a little more challenging because I actually got seasick.
Oh, I'm
Uh,
sorry.
so,
Okay.
so my husband really had to man the fort on that
Oh,
one.
wow. Okay. We got to
So
tell
I think
Tiger to do something about that.
yeah, I don't know why you would think such a big boat would not cause any issues. I was surprised that I didn't feel well for
Okay.
most
All
of the
right.
trip.
For those of us who are maybe more in the landlubbers camp, I guess down in Orlando, Epic Universal opened at Universal Orlando Resort in May. I think Disney talked little bit about maybe there'll be some short-term hits, but longer term, having more exciting attractions down in Orlando is going to bring more people down to that neck of the woods. Any sense, Melissa, on how the theme park business is going to fare for Disney this quarter?
I think that domestically, there's a view that in the market that it's trending okay. And I think additional attractions are great because Disney still gets a very significant repeater customer base. And
Okay.
that repeater is quite loyal and having new attractions is giving them yet another reason to come down and
Right.
spend and to engage with the brand. Internationally, it's a bit more challenging. I think there are some open questions about what the true growth rate for Hong Kong and China are going to really look like, especially in the face of the current backdrop, and how those numbers are going to ultimately shake out for the year and then going into next year.
All right. Let's move over to our friends at Warner Brother Discovery. With the announcement of separation of streaming and studios and to global markets, I would imagine that maybe Wall Street's taking a little bit closer look at the linear business than they have in the past. Your expectations there? Did the ad business improve for Warner Brothers Discovery in the second quarter, Melissa?
I'm going to just go back to my Netflix commentary. They're still leading, especially in the overseas markets. Returning content is supporting Warner Brothers, but
Right.
for Q2, right now, Visible Alpha consensus is looking for $1.8 billion in adjusted EBITDA, with 1.4 of that coming from Global Linear, which is actually down 350 million quarter on
Really?
quarter.
Maybe Gunner, that he's going to be in charge of that business again. I guess the plan is for it to be executed by mid 2026. I guess a lot can happen in the meantime.
Indeed.
All right. One thing there, continuing on the linear side, much was made, especially among us NBA fans. After 35 years, TNT is out of the pro basketball business, or I should say the NBA business. I think management has talked about, though, they were able to secure a lot of new affiliate deals at rate increases. And I guess that's going to help the new business in the short term, but without attachment or firm attachment to the studios and HBO, do you think the linear business is going to have a difficult time securing good rates going forward?
It's hard to say. We're going to just really have to watch the numbers and see how they navigate the environment and really manage this business.
On the streaming side, they're building the business. They're talking about having a full year of 1.3 billion in EBITDA for the streaming business this year. Your sense is that they're going to have a strong quarter when they come out with the second quarter results, Melissa?
The market right now is looking for $208 million from the streaming business and adjusted EBITDA. That's going to be the number that they are probably going to anchor a bit to. So I think anything north of that would likely be seen as a positive.
Okay. The other side of it is Max or HBO Max. I guess we're back to HBO Max. That's a story for another day. It launched in Australia and Turkey earlier. In July, HBO Max was slated bound in 12 new European and Central Asian markets. And then I guess by year end, the product is supposed to be in 85 markets around the globe. Next year, early in the year, it's supposed to launch in the UK, Ireland, Italy, and Germany. The company had 122.3 million streaming subs at the close of the first quarter and says it will get to 150 million by year end 2026. Do you think they're going to reach that goal?
I think it really depends on the content. The content is what has brought viewers into streaming in the US. And I think overseas is not going to be that much different. It's just going to be about offering that appealing, differentiated content that is fun to watch and brings users in and makes them come back week after week or to binge watch. I think that's really the secret sauce. So it's hard to say. For the US, for example, if we were talking about HBO Max, I love watching White Lotus and Gilded Age. These are great shows. They're 3 seasons in. Is next season going to continue to dazzle me the same way that the first 3 have?
All right, let's go to the movies. F1, the Formula One movie, hit theaters on June 27th. I know it's an Apple production, and by all reports, Apple TV is going to land F1 rights in the U.S., displacing ESPN. Still, this Brad Pitt star is being distributed by Warner and is doing very well. The latest Superman iteration from James Gunn came out July 11th, and Minecraft and Sinners also did very well earlier this year. I guess this underlines what David Zaslav thinks is the strength of the studios, your sensibility for Warner's theatrical business.
Yeah, absolutely. I think that there is an underlying view in the market at the moment that there is some positivity. And right now, the consensus is looking for $557 million from the studio business and adjusted EBITDA. So it's over double the size of the streaming business. And in terms of profitability, and with a few summer blockbusters and some great hits potentially coming into the pipeline, that's a compelling business to keep an eye on.
Okay. All right. We're going to wrap up by discussing Paramount Global. Let's talk about their streaming business. In the first quarter, Paramount saw DTC revenue grow 8.5% to over $2 billion. And subscription revenue advanced 16% to $1.57 billion, boosted by customer growth for aggregate streaming service Paramount Plus. All told, the company added about 1.5 million DC customers sequentially to finish the period with 79 million. Your expectations, what do you think of Paramount Plus?
I'm a subscriber, and I think we're right now, based on Visible Alpha's consensus, Paramount Plus is expected to see subscribers be down. However, in domestic and international markets, that may be a function of some of their content year over year. It's certainly not entirely clear why the expectations are driving that down. In terms of the fundamentals of the business, DTC revenue is expected to be $2.1 billion, and it's intended to generate $87 million in OIBDA. I think it's a line of business that is breaking even and generating profitability, but given the level of revenue, you would think that it would have a larger margin.
Right. Yep.
And that we wouldn't be seeing subs down. So I think
Right.
that's something that we're trying to understand and watch some of those dynamics.
Yeah, I know they expect the DTC to be profitable in the full year here in the States. So we'll see if they get there. But to your point, yeah, there's a lot of revenue that you would think that the profits would be a little bit higher. So
I think coming off of last quarter, they did generate losses of $109 million. I do think that the fact that it is expected to turn positive in this coming quarter
right.
is a positive signal. And so I think we just have to keep an eye on this business and see like what is longer term potentially the right level of margin for them to be generating.
All right. Let's end up on what is reportedly Tom Cruise's final turn as Ethan Hunt in Mission Impossible: The Final Reckoning. First, Melissa, can Cruise say goodbye to this franchise?
I don't know. He's got a track record of just coming back again and again. So we'll see.
All right. This is the question that I get. So the movie has grossed some $600 million worldwide in the box office, but for many people, it's deemed as being a failure. Again, is this about costs?
Yes, I think that's exactly what we're seeing in the numbers. And if I can just take it a step further, Visible Alpha consensus for the film segment is actually expected to generate a loss this quarter. Part of that is probably attributed to the Mission Impossible franchise and the production costs associated with it.
All right. We'll see where that turns out. I think at the end of the day, the company will get another boost when it winds up being on Paramount Plus sometime later this year. And that's when I will see it.
Indeed. You and me both.
That concludes this episode of Media Talk. I wanted to thank our guest, Melissa Otto, for sharing her acumen on some of the dynamic shaping results for Fox, Disney, Warner, and Paramount in the upcoming second quarter reports and where this could lead us. Melissa, thanks so much for being with us.
Thank you. It was great to be here.
This is Mike Reynolds. Thanks to all of you for listening. We'll catch up soon on the next episode of Media Talk.